Good afternoon, Scott Redler, T3 Live. Welcome to today's recap. So it is Monday. Felt like a long day. Came in today, lots of volatility, lots of fear. Nobody truly knew what was going to happen. Futures are down 20 handles, where we're going to open down 20 and go down 40. That's the way some people on TV made it sound. And at this point, no one really knew. But what did happen is we opened down about 20 handles, right around the 8-day moving average, right around where we held the primarily all of last week. And you saw a lot of stocks go green, tactically making good cash flow. Some things even went green and extended a little bit more. Today was one of those days where it was kind of hard to sink your teeth into either way because we just made new highs. Market's not even oversold. This is, could be the second, third inning of this whole thing in the Ukraine, or it could be the eighth inning. You don't really know. So why put yourself out there either way? If you have a macro plan, stick to it. If you're trading for cash flow tactically, even very, very short term, you could have made money both long and short as long as you didn't overtrade. And then if you're looking for a little bit, if you've been in some swing trades or swing longs, still, most high beta names are still above their 8 and 21-day moving averages. So typically, in my book, I like to, I know I did go home pretty flat on Friday just because I was a little fed up with the whipsawing and I kind of got lucky that I didn't have the overnight risk. But ultimately, if you're in some kind of portfolio approach, most like to stay in it as long as we stay above the 8 and 21-day, and we still are. So let's just quickly go through some stocks and some indices. You look at the chart of the SPX and you will see, intermediate trend right there, accelerated one right there. To start the year, just to rehash a little bit, we broke that, then broke that, held the 150-day with a nice little red dog reversal. Then we had a big-time move right back to prior highs. Tried to break out here, couldn't really do it. Tried to go again, and then that was Friday, and then today. If you look at what happened today, if you didn't know anything in the headlines and you had the TV off for the last 2 weeks, you would say, wow, this market looks pretty good. Big move from the 150-day, holding the 8-day. Not enough power to break out yet, but still above the 21, still above the 50. And we actually opened red and went green. And to me, that looks somewhat strong, and the bulls are still in control, and we'll see what happens thereafter. As far as you go with the Qs, let's see if there's anything there. Qs did hold the 21-day, okay, right, which was the old high, pretty much. Came off it, didn't open lower and fall apart. So I know people say, oh, tops happen in like a rounding formation. We still need to see this. They still have a lot more to prove before you start running for the hills and getting out of all your key stocks. Look at the bio, see what they did today, because they got hurt pretty bad on Friday. And look at that. They held the 21-day. So if you had a stop at this upper level, if you were playing the bios for a nice bull flag breakout and said, uh-oh, it didn't happen, let me get out of the way, or when we broke the 8-day, you could have tried yourself at the 21-day, which, again, most things held. This didn't even get back to the prior high, so you have a small red dog reversal there, and we did see a small red dog reversal, or tactical one if you come back to me, in a lot of names. But again, doesn't mean you need to be all in, doesn't mean it's a swing trade, or it has to be. It could have been just a cash flow trade. That action area leads to some type of potential. So if you go to Tesla real quick, Tesla had a really nice move. It did it while I was at the gym, and I think Sperling was pretty involved in it. This one didn't even get to the 21-day, didn't even test the gap here. So you had a move to test the 8-day, went from negative to positive through a prior low of 242, red dog reversal again, and if you were thinking long, you made yourself some decent money there. And now we'll see what happens with this little pivot here. If you were short from the red dog reversal here and you said, I'm going to hold it, I think it's going to get crushed all the way down to wherever it's going to go, okay, then you have to still sit through and you have to go with that strategy. Tactically, though, you had a reversal right here, still some negative action. This was the 4th down day, so if that were me and I was still short from 259, I probably would have covered once we held above and closed above 242 and said, you know what, the bigger picture typically with this stock is long. You probably can make more money from the long side versus a cute short. And you go to the weekly or you just go to the monthly chart, and a lot of longs have been winning there. Same thing with the weekly. So with that said, here is your daily chart. Tactical short, tactical long. Now with a little bit more time, maybe we get a wedge and it continues. As far as another one, I guess heavily shorted stock that people, they don't trade them together, but from this upper wedge that pretty much broke to the downside, held at 21-day, just like a lot of the high beta names. Held at 21-day, little red dog reversal, so perhaps you can get some kind of bounce back up to here before it needs a little bit more power to continue. If you look at Facebook, pretty lethargic today. Last week we talked a lot about this accelerated trend that seemed like it was under some pressure or vulnerable, especially when it did a small little breakout here. It was upgraded, I think, 3-4 different times, couldn't get up, so typically that means it goes down. Didn't even get really to the 21-day and tried to reverse. Not quite a red dog reversal, but stabilizing. We'll see what happens here. 1, 2, 3, 4 on the 5th down day. Definitely hard to be a short in Facebook. Rarely do you get that many down days, but didn't scream to the upside. Let's see if it goes sideways and then maybe we get a pivot to trade to the upside. As far as Google, it was pretty weak today. But what did it do? Just like most other things that have been very, very strong, that broke its 8-day, it held its 21-day for now. And we'll see if that continues. Apple, which was pretty much what I went with earlier on. It was a nice trade for me from negative to positive. And then towards the end of the day, it showed a little relative strength, so I did go back to it. I guess you could say it's trying to build some kind of wedge in here, and we'll see which way it resolves. You have a small pivot right here too. If this were to get above 532, maybe it gets a little bit better, but all in all, I'd still take this on a smaller time frame, and if it's proven in a down tape, it could go positive. So if you need to have some kind of exposure, maybe this is one of them. Some news out about the entertainment system in the car and this and that. We'll see if we get any better news out there, because it's still kind of not very compelling, but at this point it's holding in there. If you recall, and I think I talked about, I don't know if I went over it in the morning call, but I know I talked about in the price point in my morning game plan note, this BlackBerry. I got stopped out of it on Friday, and then I said, you know what, I'm going back to it. It wasn't like I was all upset and worried and say, you know what, the stock got me, I'm never going back to it, because it looked good. It looked like it was holding in there. But from where it came from, why not stop you out? And it stopped me out. I came in flat BlackBerry, but I said to myself, you know what, maybe you get a red dog reversal at 995. Maybe it wants to test a 21-day. And so those on my VTF saw me get long probably in the first few minutes of the day. And I had a nice move from 970 all the way back. And now look at it, holding pretty strong, pretty engulfing move. I don't know if or when it might take this out, but building a nice little pattern here where at some point it feels as if it could continue higher. So keep tactically maneuvering this, because there's big percentages there. Why not? And also, I think we're looking at the banks, but the banks were weak today. I didn't touch one bank today. I didn't buy Bank of America. I didn't buy any, I guess I shouldn't be proud of that. But anyway, here's your XLF. Still holding the lower end. Perhaps go sideways for a little bit more, and then if the market wants to go, maybe you could try again. So still hanging in there. Not rewarding those to pressing the support, but I guess giving some people some cash flow, buying it there. We'll see. This little guy plug, which we've talked about a lot, wound up closing on the dead highs, and I know it's come a long way, but I did buy some basic studies. Go to your volume. You do have really nice volume. Let's hope they don't announce a secondary or something. But all in all, moving very, very well. Last time we played it around here. Gave you a nice little gap up. It's continued. Some saw this nice and early today. I was a little late there, so this could be a day one that leads to more. I've seen some of these crazy moves, and it seems as if electric cars or electric power, that thesis is just making its way around between Tesla's attention, and then even this little KNDI still trending, still looks good. Look at this breakout here, all the way down into what, the 850s, and now it feels as if it held the 8-day. It's turning into a name that people like to go to, and it potentially could continue. We'll see. Back to social media, Zynga for a little guy, holding in there. It's amazing the strength that this stock has had. I got stopped out of it on Friday. Since I do have a thesis here, I went back to a little bit today. and we'll see if it can continue to go sideways and go again. It seems like there is accumulation in this guy, and perhaps could see another move. And listen, I hate the fact that you know, I'm not in some of these big stocks, whether it's a Priceline or whether it's a Google, but it feels as if these little guys, you could trade more volume and there's big percentage moves and there's money there. I was joking around with some people on Twitter, look at JCPenney. I know it's a broken stock, and I know that, you know, everyone kind of hates it. Yeah, they hate it if they were in it all the way up here, but here you had a nice gap after earnings, so make it as if it's any other stock. It held the gap and then turned higher. So this is one of your, this is someone's trash, so this could be your treasure. So perhaps it continues, and maybe this time it tries to get back towards $9. We had a very nice option play into earnings. So from here, looks okay. Same thing, I guess that's why I said it for BlackBerry. From here, that, you know, it looks okay. If you had it way back here, you're not very happy with BlackBerry, but it's getting a little tight. The chart looks like it's okay, and we'll see. Same thing goes for Zynga. If you had Zynga from all the way up here, when it broke every piece of support, whether it was here, or whether it was there, in your trash bin. But if you're acting or trading it a lot this year or just holding it, it's been acting better. Let's see what some of the casinos did. Win has been unbelievable. I'm sorry that I haven't been as active in that area, but still trending. This didn't even get down to the 21-day. It's hugging the 8-day. What did LVS do? LVS also held the 8-day. Lots of things holding in this market. Not many things breaking. MGM, oh my goodness, this stock, whew. I wish I had all the MGM I had back down below 16-ish, but whatever. Still holding the 8-day, flagging again. So as I look through a lot of these names and a lot of these stocks, most best-in-breed stocks are still above the 21-day. The S&P itself held last week's support. I know intraday was a little tricky, went below, but came back above it. And most things are holding in there. And some even look like they could be ready to break out. So don't abandon the market because of the headlines of the Ukraine. And I know, as I said before, it might be the 3rd inning or it might be the 8th inning. You don't know. Tonight at night, who knows? Maybe some fighting, some actual firearms go off because they don't leave Crimea, if that's the right way to say it, and the future's open down again. Or who knows, maybe they come to some kind of diplomatic solution. The bottom line is you want to do what's comfortable for you. If you have a macro plan, I think you should stick to it. If you're worried about the overnight volatility and you were jumping out of your skin all weekend long with all of the headlines, then you had too much risk on. You probably had too many longs, you had too many shorts, so you should be paring it down and maybe getting back to a spot that's more comfortable for you. I think both longs and shorts were, obviously, shorts felt a little bit better because they figured we'd get some kind of gap down, which we did. But all in all, during times of volatility, it creates opportunity, but it's only going to be opportunity if you're comfortable and you're seeing things clearly, and hopefully we're helping you that with the morning call, the recap. The Scott Redler morning note all access should be out soon. Very excited about it. We're packaging it really well. We're trying to get it out as early as possible because it's going to be a premium product. I want to make sure you get as much value added as possible. I do think for those that are not in the note now, I'm not sure all pricing. This is not my department. I'm the chief strategist. I write everything, and then the staff packages it and sends it out. All I know is I get up every day at 4:45 so I can start writing it at 6:30 to get it real time so I can go to my editor at 7:15 and he can make it look pretty and get it out. And we're here doing the video so you can get that early too. But all in all, I think it's less than $200 a month if you come in for it now. And what is that, $15? No, $200 a year. Sorry, a year. Big difference. That's $15 a month. I think some people spend that on, you know, their egg sandwich and their 2 iced coffees and a water early on. And I do think that it could add a lot of value to your trading if you've been getting the morning note already and you've been, you know, we've been giving it out to everyone for the past year or 2 years. You see that there's usually 20, 25 names on there with if-then scenarios, strategies. You can pick and choose which one you might want with the market commentary. And then you get to see the disclosures on the bottom so you know what I'm long or short or flat or not. You know, if you're not in the virtual trade floor. And I think, you know, this morning note combined with the virtual trading floor is great because then you get to see all the dots connected. And for those of you on the virtual trade floor, you will be getting this note and the private Twitter feed, so do not worry. But for those people who don't trade all day long and can't spend the ticket on that, this is, to me, I think, a low-cost product that could at least keep you in the movement of the market and potentially give you some nice setups to make daily cash flow or weekly cash flow for you on top of whatever job you're doing. And with that being said, you got to catch I said that word again, I'm trying to work on it, a 4:45 ferry, and I'll see you tomorrow morning with Brittany. Have a nice night.
I'm Mark Sperling, Director of Trading with T3 Trading Group and contributor to T3 Live. Do you trade on your own, but you wish you enjoyed the benefits of a large trading floor? With the T3 Live virtual trading floor, we deliver that experience to you on your computer. On the VTF, you can follow the long and short positions of experienced professional traders like myself, Scott Redler, and others, and listen to our live radio stations as we navigate the markets. In addition, you get the added value of a large community of sophisticated and like-minded traders. In my opinion, joining the room will be the best trading decision you will ever make. I would like to invite you to begin your membership with a 7-day free trial. To get started, visit t3live.com and click on the Virtual Trading Floor tab. Have a great day, and I look forward to seeing you in the VTF. I'm Mark Sperling, Director of